Be great to have some volume on. All right, good to see everybody. Welcome to Charts and Coffee. All right, gang, happy Wednesday. Happy FOMC Minutes Wednesday. Just a quick reminder, we do have epic shenanigans going on. All right, so taking a look at the economic calendar, gang, everything is really revolving around that 2 p.m. minutes. Now, remember, Lyle Brainerd came out yesterday, and I was in the futures room, and we were looking at some setups. Lyle Brainerd comes, hits the mic, or whatever speech she was giving, or comments. I don't watch, by the way, for those of you wondering, I don't watch them. I wait for the reaction. You want to know what's going on the economic calendar, right? We want to know what's going on in the economic calendar, but then what they're actually saying is really not that interesting. I'll take a look at the target rate probabilities graph on the CME website, and I'll look at my charts. We can look at our charts and you'll see how that information is being processed, how it's being discounted. And ultimately, Lyle Brainerd woke up yesterday and chose violence, right? That conversation quickly accelerated to the half-point hike in May is extremely likely. It's just hovering below 80% probability. And then June ratcheted up to possibly another half-point hike, which would put us at a full percentage point higher by July. Yahtzee, that is a little bit more accelerated than market participants were likely even thinking. So that is where we sit. That is where we sit right now in terms of going into the FOMC minutes. Are we going to get a reprieve? I don't know. Nobody knows, but we know there's going to be a lot of hesitation to place any significant trades in front of that event in terms of, guessing. Some people like to guess. Some people like to play let me position for a particular scenario type play. So that's pre-positioning. And then there's another type of psychology, which would be post, what happens after, what can we do to react to the volatility that hit? And that's the post positioning that personally I prefer. So that is the story today. That is what we're dealing with. And meanwhile, we're going to enjoy some coffee. Not too much, though. We don't want to get twitchy. All right. So with that being said, let's jump on over to your questions. And it's what this show is all about. And kicking it off. Hey there, Sean. Looks like we're going to open gap down on the indices, right? We really want to be specific, about the indices, which index, which sector, which stock. Yes. So it looks like we are going to have a gap down. If y'all recall, last week, one of the videos that I posted, maybe it was Thursday's video or Tuesday's video, I can't recall. But if you head on over to the Simpler Trading YouTube channel, which you're probably on right now, you can find the video that says now is the time to look to the downside. This was after the end of quarter, end of month shenanigans. Oh yeah, everyone, from time to time, everyone knows, but from time to time, everybody asks me what's going on with the puppy. There she is. Being a good girl. You being a good girl? Yes. So she's making a cameo appearance from the puppy today. All right, she's not a puppy anymore. She's almost 60 pounds. Yeah, we got her when she was 6 pounds, I guess. So anyway, yes, gap down, do's and don'ts with mornings like this. The gap itself, Sean, is not really the issue. We're going to be doing some day trading in the Sector Secrets Mastery, looking for some day trades. And if the day trades don't organize, do's and don'ts, don't force trades on intraday. Do look for opportunity across different time frames. So if I don't have an opportunity to set up something on a 5-minute, whether that be a V-score low, slow stochastic exhaustion, whether it's something based on my HPMRs, right? It's a tool that some of you should be familiar with this, but for those of you that aren't, this is a tool that I created years ago, probably 7, 8 years ago now, based on my work in Forex and based on understanding time and volatility. So we'll look for opportunities with that. If nothing shapes up, Sean, if I don't get a pitch in my zone, I will move on. And what we'll do is we'll start looking for opportunities elsewhere. If the market is up, I'm usually looking for what markets are in a downtrend and we can short. If the market is down, I'll look for markets that are in uptrends and what can we buy. So it's always going to be, has price action closed the distance to the zones that are opportunities for us. And so that's why we prioritize trends always. And that was what yesterday's free video, by the way, back at the Simpler Trading YouTube channel was all about. How are you building your watch list? I went through a number of symbols that are on my watch list right now as we talked about prioritizing. Gang, always prioritize uptrends. And you might say, but Rog, look at the indices. I want you all to get to a point, truly, where you don't have to give a rip what's going on with the Nas, the S&P, the Dow, and the Russell, where you can either trade with these hugely influential, of course, broader tides, or you can say, you know what, how do I trade around the narrative of the indices? How do I focus on maybe macroeconomic trends and the technical trends that are organizing there? How do I play, say, the stock market in Brazil? How do I play the stock market in Australia? Trends there. How do I play trends that are moving higher? Right? We've been on some of these trends because they're macroeconomic trends for, at this point, months, right? There are trends out there. So do's and don'ts. Sean, do prioritize trends and don't force trades. I mean, it's really the same advice every single day. However, one thing particular to today, Sean, is today's a caution day, FOMC minutes. So in many ways, smaller position size, more conservative entries, and it's okay to kick your feet up on the desk and chill today. It's all right. The markets will open tomorrow and we can look for opportunities. Now that's intraday. End of day, I'd like to take advantage of some of this volatility. All right, next up, Kim. Good morning, Raghee. Good morning. Did something particular happen at 3 a.m. to make the markets tank overnight? I always wonder the why. Sure. The why behind sudden moves. So the why, oftentimes, if it's specifically at 3, is going to be tethered to, well, first of all, what I would recommend is start the search for the why over at the economic calendar. So you would head on over to Forex Factory or whatever your calendar of choice is. I like the Forex Factory calendar. Been using this one for many, 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 many years. And scroll to the day and then ask yourself, were there any economic events that were released at or around 3? So you can see here, nothing. Okay, so anytime 3 o'clock is part of the volatility, let's go to the intraday. Hey girl, go lay down. It's okay. Go lay down. Anytime 3 o'clock is part of the conversation, you can see here 3:30 actually is when we started accelerating lower. It might have been a comment, but where, right? When? Who's awake is the question. Who's awake? That's UK. That's really the UK Open between 3 and 3:30. That's actually the UK Open, Kim. And so it's going to be something related to the Open there, the London Open, if you will. All right, next up. How do I use daily price movement range, DPMR? So if I talk about HPMRs, hourly price movement ranges, DPMR is the daily price movement range. Kat, you want in the office right now? Hang on, you gotta wait, buddy. So I'm babysitting all the fur babies this morning. All right, so how do you use a DPMR? Now, I do not use average true range. I do not use those at all, really. Not that there's anything wrong with them, but I just use daily price movement ranges, which are historical volatility. So how do I use them to inform my entry decisions? I've been caught catching falling knives on more than one occasion by the time the day's candle closes. So I don't know that a DPMR stops that, Dean, but you're absolutely on the right track. How do we measure the move? How do we know what we're dealing with on a particular day? Are we trading within normal price movement ranges, or are we beyond normal price movement ranges? And that's the question that I ask of DPMR. I mean, that's what it's designed to answer, not much more than that. So here's how I use that measuring stick once I have it. One is, if we're beyond the daily price movement range, I will usually be kind of hesitant to put on any kind of size or any position sometimes, period. Freeport McMoran was a really good example of this. This is a trade that we've had on for some time, and I want to get back in. And we had a great sell-off yesterday, but it was beyond the typical price movement range. And because of that, even though it reached the 21 propulsion, I thought, yeah, it might make sense to just wait, or we can put in a small aggro size budgeted position. And that's what we ended up doing. So below that, we'll have the moderate, we'll have the conservative, but that DPMR warned me not to get too aggressive with the size in terms of positioning. So that's one thing that DPMR helped. And then also targets and stops. Trailing stops, especially, one of my favorite ways to trail a stop. Oh, he is not going to be denied. One of my favorite ways to trail a stop is with daily price movement ranges. Hang on, gang. The cat does not care that we're doing our morning show. Let me go let him in real quick. Cats. All right, dude. Come on. You lay down. We got the cat and the dog. Come on. In or out? In or out, Bubba? There you go. All right, you need to lay down. All right, cat and dog, same room. If something happens, it'll be on camera. Yeah, you be good. All right. So anyway, so the main thing here is, if I have these historical price movement range measuring sticks, can I then use that to trail a stop? Can I then consider that in terms of profit targets, right? I know a lot of you might use the Z-score on an ATR. You can pull a Z-score on anything, right? The standard deviation. So a lot of you might use that. That's fine. That's fine. I just like to use historical price movement ranges. And so I'll just use the arithmetic of how many points does a particular stock or ETF or currency or Forex, whatever it is, move on a particular day. Now, the thing with DPMRs as opposed to ATRs is DPMRs are specific to the day. So the daily price movement range is on Mondays different than Tuesdays, different than Wednesday. Different days have different historical price movement ranges. So I can be very specific to the day of the week, which I think is a bit of an advantage. All right, thanks. Great question, by the way. I love talking about historical price movement range. It's something that's been a big part of my trading for a lot of years. So I thank you for the question. All right, moving on. Next question. Robert asked, hey, good morning, Robert. Do I use the squeeze as part of my strategy, or how do I think it could fit into your strategy? The squeeze is our flagship indicator. I get this asked a lot. Not really. It's not a big part of my daily strategy, not because it's not great. It's amazing, right? But I'm a trend follower. I'm not a momentum trader. So the way that I look at breakouts is ideally, so let me get to the second part of your question. Rog, when you do use squeezes, right? I sound like a Dos Equis commercial, right? What's that Dos Equis saying? When I don't drink beer often, but when I do, it's a Dos Equis, or however that goes. Yeah, I don't play momentum often. When I do, though, it's with the squeeze. And that means that I need price action to compress, or you guessed it, squeeze. How do we know a squeeze on my charts? Blue grab candles, at least 4 of them in a row. So, and the other thing too here is at Simple, we have so many of our traders using the squeeze. We just sort of know by osmosis if something's firing. Now, I don't look for squeezes intraday. I look for them mostly end of day. So I'll look for them on a daily time frame. That means I want 4 sessions, 4 entire sessions to be blue, 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 blue grab candles, 4 of them in a row. And then I'll look for momentum breakouts or breakdowns. Now, one of the most powerful ways to do it, this is one of my favorite ways to use a squeeze as either an entry or as a confirmation of a pullback that I've already bought, is the markets are trending and stall. Sometimes they pull back and or stall. And if I start getting those blue grab candles, or if I start getting narrow ranges, 4 in a row, 4 is my magic number. It just seems to work really well. Then I'll start looking for the squeeze. And the wonderful thing is, within the context of a trend, my favorite squeezes do coincide with pullbacks to the wave, right? So that's how I do it. That's how I do it. So again, every strategy has a certain indicator that it tends to lean on most, right? And every strategy has to be considered valid or not valid based on the environment, which is why I always say structure dictates strategy, strategy dictates the indicator, right? Believe it or not, one of the easiest fixes for traders who are struggling is they do the process backwards. They go indicator strategy. I've got this brand new secret squiggle. I want to put it to use. And that is where, hey, every one of us who's ever golfed, we get it, right? It's a very easy thing to fix, but it's a very easy thing to fall into, which is I've got this brand new club in my bag and I will find a reason to take it out and use it. And that's the same thing that happens when we get a brand new secret squiggle. We just can't wait to use it. Every secret squiggle has an environment that it is best designed for. Part of learning to use it, part of learning to use a new club in your bag, right, if you're a golfer, is knowing what shot it was designed to help you with, right? So that's the bottom line on that, Robert. I need a compressed market, and then the squeeze is the best way to decode momentum breaks. It's akin to having an indicator that if you're playing a game of musical chairs, which is what momentum trading is, the music's playing, the music's playing, the music's playing, it stops, and everybody's trying to put their butt in a seat. Now imagine you get just a nanoseconds heads up that the music is going to stop. Before everyone's scrambling, you're able to get your butt in a seat. That is what the squeeze does in the musical, right? The game of musical chairs of momentum trading. And that's obviously very powerful. Okay, next up, do I think Oxy may be setting up for a long entry? It's been on the list. And there's a number of names in oil that we've been trading, as I mentioned earlier, for months at this point. And the main reason I like, Eddie, oil stocks right now over oil itself is because oil itself is getting very choppy. It's no longer really trending. It's bullish bias, but it's not in a trend. Oil stocks, however, XLE, OIH, XOP, and many of the stocks within those, here we go. Within those ETFs, take a peek here. Beautiful uptrends. And you can see it's actually hard to find one that's not, whether it be Exxon, Chevron, whether it be EOG, COP, there's Occidental down there. So we want to find things that are pulling back to the wave. DVN's also doing that as well, and engage the market from there. So yes, I think it's going to be one of the opportunities. But remember that we would like to see these things on sale. In other words, I want to get a blue light special out of it. I want to see that something that's moving higher is on sale. That is the core of what I do. That's the timing of what I do. So what we trade, relative outperformance scan. When we trade it, when is it on sale? So yes, and a simple answer, absolutely. All right. So next up, so sometimes do I only do one type of entry? In other words, just aggro, just conservative? Yeah, sometimes I do travel. Not often, but no, I shouldn't say that, because just yesterday, I think we did some aggro onlys. And the reason for that is the proximity to where we are is only at the aggressive. Usually there'll be all 3 levels, but sometimes if I want to control how much capital that we are deploying for a certain trade idea, which remember is risk management, I will go aggro only or conservative only on the trade. All right, gang, as always, thanks so much for joining us for Charts and Coffee. And I do mean us, the cat and the dog. Where's the cat? Where are you, buddy? Oh, there you are. All right, we all thank you. Everyone's in one piece. All right, the cat's in his floof. Dogs in his. All right, we're good. We're good. Thanks as always for joining us, gang. If you have any questions, feel free to leave them in the comments. We're on every day, 9 to 9:20. And if this is moving the needle for you, smash that like button, and I will see you tomorrow. Be good to each other, gang.